Imagine this. Your market is crashing, red candles everywhere, and your portfolio is bleeding. Or the opposite. Everything is going up. Every influencer is saying buy more. Your favorite YouTuber and influencers is saying this is just the beginning. We are going to see $100,000, $1 million of Bitcoin. And both the times you make the same mistake. You act on your emotions, not logic, not data, and the market punishes you for that. So the question is, how you protect yourself from yourself? The answer is simple but rarely followed. You build your own systematic trading lab and environment. A personal framework where your decisions are not driven by emotion, fear, or anyone else's opinion, but your own tested logic. Today I am going to show you how you can build such kind of environment in your own personal lab or on your own personal laptop without any coding skill. Let me be very clear. If you don't have a written strategy, you don't have a strategy in the market. You have an opinion. An opinion can change with every headlines, every news, every YouTuber video, or every tweet that you see. A real strategy is clearly defined, well written, well tested, and is repeatable over time. It acts as a safety net for your portfolio, because when market hits peak fear and peak euphoria, your brain becomes unreliable. At market tops, you feel invincible. At market bottoms, you feel doomed or defeated. But your automated system doesn't feel anything. It just executes your logic based on your understanding. Think like a scientist. Before trusting anything, they test it in an isolated and working environment before publishing any of their work. You need to do same thing with your trading ideas as well. So instead of guessing what will happen next, you need to backtest your ideas and logic. You take your own strategies and test on historical data and see whether it survives the crash. Does it actually work? Or does it perform consistently over a period of time? This is your trading lab. And the best part about this is that you can build this on your own laptop without needing any coding language. Here's the simple steps you can take to create your own home lab so that you can test your strategies. The first thing that you will need is to install Python in your laptop. Use JupyterLab, which is built on top of Python as an in lab to test your or backtest your code as strategies. The best backtesting library I will suggest for beginners is backtesting.py, which is a fully automated script so that you can test your strategies pretty easily and without any logical constraints. That's it. No expensive infrastructure, no expensive tools. And today coding is not even a barrier now. You can literally ask AI to generate code for you based upon your strategies. Now here's something important. Strategies are not something which are too complex. At core, they are just if-else statements of your own logical thinking. For example, a simple strategy would be you buy at a particular position when the buying price go above your discussed SMA. If it goes below, you sell it. So these are just if-else statement. If the price goes up, you buy. If the price goes down, you sell, something like that. So strategies can be very simple and it is purely based upon your own logic. For example, let's say you have a strategy called SMA identifier. For example, if the price goes down, the strategy shows you have to buy now. If it goes up, it shows that you need to deleverage yourself, or based upon your position sizing, you need to reduce your risk. Then you can sell in that position. That's it. You can build your strategies using SMAs, RSI, moving averages, mean revisions. It completely depends on you and how you perceive the market. If you have heard anyone say that I trade using this kind of pattern, why don't you ask them the question, how you identify these patterns? Can you code this in pattern into your strategies? And have you tested this strategy or backtested this strategy on the previous historical data? If then they don't have an answer for that, then you need to find a different mentor. Because if it cannot be tested, it's not a strategy. It's a small horizon guess for a particular structure, which can be pretty unconvincing at a larger time frame. So here's what you do step by step. Select an asset that you want to invest in. For example, let's say you have to invest in a Bitcoin, or you need to invest in ETFs, stocks, etc. Pick an asset class. Download historical data of price actions of a particular asset class by using a lot of open source data sources, like you have Yahoo Finance, which gives Bitcoin data for freely for 10-15 years. You can use that kind of data to make your own data set. Write your strategy rules. You can give your strategies in written form to any LLM AI and it can generate code for you. Put this code into backtesting.py already written libraries. You just need to paste the code from the LLM into the backtesting.py libraries, and you have to take the input from the data. Run the test, and what do you get? You get return, drawdown, average CAGR of your strategy, and how much money it can earn you over a period of time. There are a lot of other metrics like win rate, risk metrics. Backtesting.py has a lot of inbuilt metrics that will help you to identify the efficiency of your strategy over time. Now you are not guessing. You are making decisions based on evidence and your strategy. Here's where it becomes more powerful, and you will start noticing it pretty immediately. Many strategies that sound good and looks good are actually doesn't work on longer horizon. And some simple strategies like SMA and RSI works pretty well on longer time frame. That's a pretty good observation that I have seen, that a simple strategy gives more consistent return over a period of long run than small trading decisions that you take in your day-to-day life. That's why most of the traders doesn't make money from trading but selling their own courses. Automating or systemizing your strategies will help you in following things. First, it will save you from blindly copying strategies of other people. It will also save you from hype cycles, and obviously it will also save you from making emotional trade decisions. Before you take next trade decision, don't ask the question, should I buy this? You should ask the question, have I tested this? Because in the market, emotions are expensive and systems are profitable. Let me know what do you think about systematic trading and investing based upon pure strategies and logic, and removing all the emotional constraints that you put on your day-to-day life. You can do this kind of strategy making and investment decisions completely part-time, and you don't need to put all your effort into it. You just code an initial small testing lab and then try to test your strategies and be consistent in your strategies and evolve over time.